Obviously, we've all seen the rise of Bitcoin, and we've all seen the political shifts that are going on in the world today. It all looks like we're reaching this point, and I've said this is where macro, crypto, politics, everything comes into the same big bucket. It's all concentrated in our pure focus right now. This generational change, this fourth turning that's coming, was probably going to change the system that we operated in. Obviously, we've all seen the rise of Bitcoin, and we've all seen the political shifts that are going on in the world today. We know that Bitcoin plays a part in this. We know that gold plays a part in this. We know that there's too much debt. We know that there's problems with demographics. We know there's a disinflationary world where wages are deflating, so it makes prices look like they're inflated. It's a really complicated, messy, ugly place. Mark Carney then raised it last year. The BIS had written some things about digital currencies, and some other governments had looked at it too. But Mark Carney, how does that work? This leads to these dollar shortages, these problems where countries like South Africa are beholden to the US dollar, when really their trading partners may be elsewhere, but the dollar rules all. It is so all-encompassing, so powerful as a reserve currency that it's breaking the very system we're in. We've got problems where a dollar abroad, the offshore dollar, the euro dollar, is non-fungible with a dollar in the US. So the Federal Reserve, if it tries to accommodate companies that have borrowed dollars in the international markets, have no way of doing it. They can have swap lines that go to the existing banks in these other countries, but there's no guarantee the banks will lend to the corporates who need it. We've also then hit COVID. And COVID was like that 2008 moment, or the European moment 2012, where everything stopped and all of the trends hyper-accelerated. The trend I'm more interested in was really the trend of governments having to use central banks to backstop them, to create enormous fiscal stimulus. So we've seen the largest fiscal stimulus by any measure the world has ever seen. And basically the central banks have printed money to allow it to happen. Now, most of us knew this was coming, but the scale of it has been shocking. And it's not finished yet. I think COVID is around for a lot longer than people realize, and the situation in Europe is only going to get worse, and I think the US will too, and it's going to require more and more stimulus. I'm not entirely sure how the Europeans are going to keep hold of their banking system in the middle of this. But against that backdrop of this extreme situation where governments really can't print more money because they just have constraints within their parliamentary systems, and yet central banks are telling them they need to do more. So then we start getting the ECB talking about a central bank digital currency, a digital euro or e-euro. Next was the IMF, out this week, papers about digital currencies. And if you see the nice fluffy way the IMF have dressed it up, it's, well, we've got a cross-border payments platform, so you don't have to use those awful wire transfer systems. But it also means that people don't need the SWIFT transfer system, which is what creates the backbone of the US dollar. Now, but when we look at this, they're trying to create payment rails, and that's great. We need to be able to just instantly transfer from our mobile phone from one person to another, like it works for Bitcoin. Beautiful. But that's not the only reason. As I said, SWIFT is another big reason. But before that comes this idea of central banks and fiscal policy. We've run out of monetary policy. Rates are zero or negative in most countries. I believe rates will go negative in the US by the end of this COVID recession. I think it goes on longer than people expect. People are familiar with my unfolding thesis, where I think we go into a insolvency phase as growth doesn't materialize as people expect. You see, central banks want to be able to give people money directly, direct monetization. Right now, they print money, it goes into the banking system, the banks hoard it because we're going through a credit crunch. So that's very typical action. They keep their reserves higher than normal, and the money doesn't get into the system. So only the best creditors get access to the money. So if you remember, the government started giving direct payments, this $1,200 and other such payments to corporates and loans. But it's clunky to go through government. We've seen some of the payments didn't happen. It was slow. So the central banks think, we've got no monetary policy left, so why don't we do the fiscal? So in times of crisis, and this is how it'll get sold, we can circumvent everybody, put it straight on our balance sheets and give you money, you in need of it, directly money. That's a great thing. So you're a restaurateur, you're out of business right now. You've got a solvency problem because you can't pay your rent, you've laid off your staff and you can't reopen. So you're stuck. Do you just lose your business you've had for over the last decade or two? Or do you somehow sit it out? The bank won't give you money. The government gave you some sort of loan, but what else is coming? How do you survive this? Well, the central bank could give you money directly. That kind of stimulus is what they want to do. It's also a way for them to kickstart universal basic income, because the central bank can underpin the poorer parts of society by giving them money directly. It doesn't go on the government balance sheet. Now, central banks now believe they're omnipotent, that they can continue to expand balance sheets forever. MMT seems to be the prevalent thought, and this is just an extension of this. This is kind of Keynesianism gone mad. But it could work for a period of time. The rise of digital assets is something so important, something I'm so passionate about, that we thought everybody needs to get it. And we've done it incredibly with a group of consortium partners, some of the biggest players in the industry who share our vision of democratizing this information. So it's going to be free, it's going to be brought to you by partners, and it's really exciting. So watch this space, you'll see more news on it in the coming weeks. And it's going to be a big launch, probably the biggest launch in crypto media in the world, and hopefully you'll all be part of it. It's there for everybody. Now, it's not just about Bitcoin, it's not just about DeFi, it's not just about Ethereum, it's about the entire digital asset space. And we welcome everybody to come and join the in-depth analysis that Real Vision is famous for and really get to grips with what's going on.